Hey, welcome everyone. As we went through the Traders Expo and shared with everyone the algo product and how we set up trade decisions. Interesting components here. This layout here is the live trading room, which is projecting. As you can see, the uh, signals generated a short this morning right off the get-go in the gold, which, as you can see down here, it's short two contracts. And generally in the algo room, that's all we do, two contracts for practical purposes because we're pretty diversified here. And the reason we have the British pound, as we discussed at the Traders Expo, is that the average true range, or the amount of fluctuation of a daily range every day in the euro currency, is almost at historic lows. So it's really a tough market to generate any type of longevity intraday trend trades. They're breakouts. They're very small. I mean, if you have a 50-point range, if you think about the notional value of 50 points in the futures, in Forex, it's $12.50 a tick. So with the euro currency, it makes it a very hard way of trading. But one of the things that we talked about in both this week's newsletter as well as at the Traders Expo is that the euro currency, interesting setup right now, is the small speculators, according to COT data, seasonality, according to my work that I did with the Commodity Traders Almanac back in the day, suggests that there's a strong seasonal uptrend in the euro. So it could be like a little bit of repatriation, people selling out, and end of year squaring. So we get generally a euro currency rally versus the dollar from the end of November into like the first three trading days of January. So you guys that are trading Forex may want to pay attention to that. Gold, I'm looking for a major wipeout down to gold. Big support is around 35 to 41, and then after that it's 13.77. There it is. That's my numbers. This week's newsletter. Let's see what we covered for you guys. Again, you can hit the pause button here and you can read this stuff, and you can see what we were talking about. This is, again, this week's newsletter, and here's what I'm talking about right there for gold. This week, we're looking at, again, loading up on a dip in the market. We are already in half a position at Disney. We're looking to add Nucor, Wells Fargo, 3M, Tilray, Capri Holdings. If you're not familiar with Capri Holdings, it's Michael Kors with Jimmy Choo Choo shoes. So Jimmy Choo. Red Rocks Casino, the Biotech ETF, the three-time leveraged Labu, and then an option trade on the Russell. I'm looking for a rally to try to short the TLT, the bonds. So our current positions right now, we are long GE at an average of $10, and we traded this so like a string fiddle in an orchestra. We bought puts against the position, we covered the puts, we rolled into lower strikes, we made money on the downside through the summer on GE after the second quarter earnings. But anyway, that's neither here nor there. We're long a little bit of Regions Financial, Nordstrom's, AT&T, Disney. Last week we took profits on a play that we had in Ralph Lauren, which we were long the stock, trailed our stop, got stopped out with a profit, took that profit, rolled it into a 105 strike, 20th expiration, 105 strike call. Earnings play came out, bailed. We also bailed on half a position on IWM option, which we made some good coin on, and we did get filled on half of Disney. Bad news is we got stopped out of Red Rocks Casino, so we're trying it again. We got stopped out of Oxy and Esperion. So if you go back and you look at our track record, this, because the sheet of paper is so long of our performance, this only goes back to the beginning of June with the long position in GE. Let me try to expand this up so that it's actually viewable. There we go. Sorry about that, friends. So this year, quite frankly, we've not taken really many short trades whatsoever. We've all been pretty much bullish this year and on the long side. Our option positions, and you can see GE. On July 30th, we bought a 1050 put when we were long 10. The market was at 1060, so we bought a slightly, for us, an in-the-money put to hedge against the poor earnings, and it did. We rolled out, we took a profit, then we rolled into a $9 put, we took the profit, then we rolled into an $8 put, and that lost money. Who cares? The stock went right back up, so we made money on the short side. Now we're making money on the long side. Here's our performance on cumulative totals for this year's newsletter so far. Stock only, long and short, up 214. This is as of Friday. And cumulative value on option trades, that were executed. Now, this has got nothing to do with what we do in the live trading room. This is purely the newsletter. It comes out once a week. So win, lose, or draw. Here's what we put out. Stocks. Try to get into these trades. We're adding on. If we don't get filled, then we reevaluate and we move on. That's the nature of the newsletter. And as I can share with you, Ambarella, Microchip, they look posed to rally this week, but I'm looking for an overall pullback this week. And with the heavy load of trades below, what do I mean by that? Well, look, I'm trying to add to Disney on a pullback. I'm trying to get into Nucor, Wells Fargo, 3M, Tilray, the pot stock. These asterisks simply mean it's a high risk, and earnings are after the bell on Tilray on Tuesday. So that's a kind of a high risk. That's why it's got the asterisks there for people. Red Rocks Casino, I'm re-entering on a dip. Why Red Rocks and not MGM? It's a long story, and to be honest with you, we explain it slightly in here, and I'm going to have to let me just point out, you may want to read this here. I got to put aside my contempt on MGM's actions of firing 1,200. I know a lot of these people. We've been coming out to Traders Expo, the money shows, for conferences, our own live trading seminars here in Vegas for over 20 years, and you get to know a lot of people. And when you get to know a lot of people and they stay with the company, they move up the ranks, and we're friendly with a lot of people. We know guys that them when they got married, now they got kids, they're sending the kids to college. I mean, it's been a long journey. Anyway, here's another little item that I wanted to cover real quick. We have a negative zero line cross with higher prices, which shows bearish divergence on the McClellan oscillator, which is data off the S&P, the NYSE, but we're trading the S&Ps. So overall, I'm still looking for a little bit of a pullback in this market in this week, but I don't know if we do much. I don't think we grind significantly lower. I think possibly it's going to be a two-sided trade. This zero line, if we see by like Wednesday, and it takes at least 2 to 3 business days to unwind something like this, if the McClellan oscillator crosses back above the zero line, ladies and gentlemen, that's a buy signal. So it's like, I'm looking for a pullback. I'm being very selective on certain stocks, underperforming stocks, number one, stocks that have not caught up to the market. We took profits on the Russell. What am I looking for? A pullback. How much of a pullback? 0.5% to 1.5% overall market pullback. And then I want to buy, and that's why we have a price on the Jan expiration, 157 strike calls, pay 4.25. I usually use about 50% of the time or 50% of the premium for my risk factor, and my target is about 750 at by about 30 days within expiration. So this would be, you got a hold date through 12/20. This is a really good way, at least for the newsletter that I write and how my style of trading since, I don't know, the 80s. I'm generally for equities, I look for pullbacks. If I don't get them, then I stay disciplined. And more importantly, I have the ability to look for other trades, and that's the key component. So we do a lot of due diligence. This newsletter comes out every single week. And by the way, this is Genesis Financial Trade Navigator, the best, cleanest data and truest indicator readings that I have found. Actually, quite frankly, between the daily and the weekly analysis, and you can clearly see here we got a little bit of dip in the Qs, we got a little bit of dip in the Russell, right? But the Russell, you see that we have, seasonally speaking, in the next week or so, kind of sideways, and then boom, January effect. So I'm telling a lot of people the Russell is that condiment trade. It hasn't caught up. It's to last year's highs, whereas all the other stock indices, the Qs broke out, the spiders broke out, the Dow broke out, and even the NYSE, look at the NICE broke out. Why is that important? 65% of the stocks in the NYSE are interest rate sensitive, and so you would think that REITs and utilities and municipal funds, municipal bond funds would all go down. It's being offset by small cap financials, small cap regional banks, small cap energy, and so there's a rotation that's keeping the market drive alive, so to speak. So that's my comments. This is this week's newsletter. I hope you enjoyed what we're having to put out. More importantly, this is the algo room. We have 2 trading rooms that people can flip back and forth. We posted this morning, as you could say, Yeah, I'm stuck in Vegas. Sorry about that. We're focused on the Russell strong daily support at the 1580 level basis futures. And if we break out, then 60-minute close above the 1605-ish on an uptick in OBV to confirm new leg higher. E-mini S&Ps. And I posted at 9:48 this morning. We were already in a 5-minute long position, which it already executed and took a profit. And you can see here, if I change screens for you real quick, and I don't want to disturb my trading community, but let's take a look at the system. You will see that this is what we presented at the Traders Expo. This is our um, Algo 17 version 2. So this is Algo 17. What does it do? I'm going to share with you right now what it does. We have implemented, it only takes trades from 8:40 in the morning to, as you can see here, 15:25, and that's Eastern Standard Time. So that's 3:25, no more new trades. It gets out of whatever trade it's in at the end of the day. It's using a position calculated method number 3. If it was 1, it would say, get me in as many trades as possible as 100 grand equity allows. If it was set at position trade method number 2, it would say, get me in as many trades possible with $1,000 max risk. So if I have a $150 risk per trade, right, it would have gotten me into like 6 positions, right? So, or thereabouts. So we have a max trade loss of 600, 680 max profit. That's a little better than 1-to-1. You'll notice that it kicks into a trailing stop method. And then finally, let's move down here. This is my last conditional change. This is a dynamic exit trailing stop function we created. This is proprietary information. This is a compression exit, which is also proprietary. These 3 concepts of stops, you'll see that on the chart that I'm sharing with you right now. You've got gray bars that go up, and you've got yellow bars. And then you'll see it took the profit out. So if it didn't make the profit target and it came back down, it would have stopped out at the yellow line. Notice the yellow line starts here. Notice the gray line started down here, because the compression exit will only start to activate if the market is going in your favor, and then it begins with at least a 1.5 time ATR. So that's 1.5 ATR of a 5-minute bar. So it's kind of sophisticated, but man, it protects your profit and it makes sure you take some dough out of the game. So that's the moral of that story. This is everything we teach and train people how to use this program. Set up your buy settles versus your sells, your risk rewards, high close, low close dojis. It's an amazing program, an amazing product, and it helps traders to at least see what's going on in the market. And as you can see, I I kind of pinch myself when I say, hey gang, how the hell did it identify? I don't think I'm the only one with this type of program. Look how it identified that profit and it traded through it and took the profit out. Very nice trade overall. I mean, this is pretty slick stuff. So on Veterans Day, and we have a lot of veterans that I wanted to say thank you for being there for us. And again, for all of those family members and my father, my grandfather, who both served, General John L. Person Jr., and then my dad, and then myself. Well, I was born in kind of peacetime, so I was actually born on a Schaffenburg in Frankfurt, Germany, on the U.S. Army base, which is now, I believe, the U.S. Embassy. So, any event, it's kind of an interesting time here for the markets today. We want to give thanks and prayers and gratitude to the veterans who help give us the freedom to do what we love to do, and that's the bottom line. And it was really nice to see a lot of balls here in Vegas with the Marines and their girlfriends and their formal dances, and see them dressed up, man. It was just wow. These guys are just amazing people. So hats off to the casino operators. I saw at Bally's, MGM, and I believe Aria had a major ball, and MGM Properties did a great job in supporting the military, by the way. So props out to MGM. As you can see, while I was blabbing away, gold, it got short. It's scaled out of 1. So let's take a look at the gold. It's a different model than the E-mini S&P, in a different model in the sense that, let's take a quick look and I'll wrap this up for you. This particular model does one thing. It scales out and then trails the stop. See, there it is. It scales out of half the position, and then it jams a stop accordingly. And so that's what's going on with this trade. Huge trade for gold traders in our live trading room. Gold's seasonally weak. We've been talking about it, but around at 1440 to 1435-ish, baby, I think we run out of steam. And please review the post, pause the recording, and you can read what I said about this week's newsletter. Thanks for listening. And I said I would post something last week, but I had a fly, and there it is, and we moved on. So thank you all very much, and I will see you on the next video.